Welcome to another S&P 500 analysis. Today is July 3rd, 2021. The S&P 500 made another new high last week, and that is not news. But what is news is that the internal is telling us to get ready. Stay tuned. So exactly what are the internals telling us to get ready for? Well, let's go and take a look at the price action and the internal and also the sentiment. Then at the end of this video, I'll give you my take on what we should get ready for. So looking at the S&P 500 on this weekly chart here, as you can see, put down the ranges. Last week we had a 80-point range and gained a little bit over 70 point or 1.67%. And on Friday, it closed up 32.40 and that's basically somewhere around 0.75%. And that's a new closing high and also made a new high for the week. And as you can see, right now, the price is still inside of this wedge here. And it has surpassed that 4,300 level that we've been looking at. So right now, the price is still above this ascending 10-week moving average and the 40-week moving average. So essentially the trend is still up. And looking at this sentiment chart here, as you can see on Friday, the S&P 500, as I said earlier, is up 32 points. And the VIX is sitting at 15. And also the put call ratio is up about 0.59. So it is getting up a little bit, but it's still the market participant are still bullish and putting on risk. They are still complacent. Fear has not instilled in the market yet. And here we're looking at the up-down volume ratio. It was minus 1.1. In other words, there were more down volume than up volume on a record closing day and on a record high day, which is a negative, and also a very measly 95 more advancer over decliner. Now that is nothing to write home about, especially when you have a record closing day and you only have 95 more advancing issue than declining issue. We would expect to see somewhere around 2,000, if not at least 1,500. And here the new high, new low, we only have 186 more new 52-week high than 52-week low. So again, that is not an impressive number. We would like to see this somewhere around at least 400, 500, preferably up at the 800 level. Then on the New York Stock Exchange cumulative advanced decline, we did see it make a new high. But notice how steep this ascent on the S&P 500, on the close. Right? It's almost coming up on a straight line. But then you look at the advanced decline, it is pretty much flat. Although, yes, it is a new high. But the flatness of the new high on the cumulative AD line kind of tell us that the market doesn't have this broad-based participation pushing up to the new high. That's the reason that brings up a new point, one of the points that I want to emphasize. That's why one of the reasons I do not, like many other, look at these indicators that using averaging of the advanced decline, right? There's our indicator out there that they take 10-day average of the advanced decline. And that hides the information on what the market actually doing. That's why you have to look at on the purest form of the data to understand what the market is doing. It's the same thing when we take a pulse, right? We look at the pulse at that instance of what a pulse is. We don't take an average of 10 different readings, right? To say, yeah, you are healthy or not. So that's the same reason that we do not, or at least I do not, look at those indicators that take an average, okay, of the advanced decline or, certain things. You have to look at the market-generated information on its purest form in order to get the context of what the market is doing. When we look at these indicators, we basically are looking for a shortcut, hoping that the market will tell us, what to do. See, the market never tells us what to do. The market only tells us what it did, and it's up to us to decipher what it did so we could, be prepared to what to do. So we have to decide what we're going to do. The market never going to tell us what we're going to do. Now, looking at the NASDAQ 100 closed almost 170 points. It closed up 167 points last Friday. It also closed with a new closing high and also made another new all-time high. But look at the up-down volume ratio. It's actually negative 1.3. In other words, there's 1.3 times more down volume than up volume. Now, how can that be a strong market when you have more down volume than up volume, especially when it closed at a new high? Okay? And again, this is even worse than the New York Stock Exchange. Right? At least the New York Stock Exchange, there were more advancing issue than declining issue. But in the NASDAQ, we're actually 845 more declining issue than advancing issue, and you have this market closing up at an all-time high. So go figure, right? It's obvious something is not right here. Right? It doesn't take a genius or a rocket scientist to see that something is not right. And here, looking at the new high, new low, it's only 91 more new high than new low on a record closing day. Now, this is much more concerning than the flatness of the advanced decline, cumulative advanced decline line on the New York Stock Exchange. Look at the NASDAQ. It actually went down on a up day, right? On a record day. So we're seeing this massive negative divergence here. So this is very concerning when we see that, we don't have that many stock that is actually help pushing the market up. In matter of fact, you have more stock try to pull the market down. So eventually, somebody have to give, right? Either the index or the advanced decline. So, you go think about it, which one is going to come to. Now, I'm going to take a look. Right now, it's this point here and this point here. It takes quite a few amount of issues or many days for the advanced decline, the advanced to outnumber the decline to get that up there, right? To make up that difference. So, and look at this ascend. I mean, it's pretty much like a straight line going up. Right? I put up an analogy and saying that, using the advanced decline as a number of people that's actually pushing a car up the mountain or up a steep hill, right? So you see here, this is a steep hill, and you're pushing it up, and you're getting less and less people to help push that car up to the top of the hill. Then eventually, those people is going to get tired, and there's only a few of them. Then the car is going to stall and then start rolling backward. So what you think going to happen to those people that's holding that car up as long as they can, and what you think what happened to the car eventually? It's going to crash down the mountain, right? At the bottom of the mountain. And that's what I'm basically looking at right now. I'm just kind of waiting to say, when in the heck is this car going to roll down this mountain? So as you can see, with the advanced decline, it is not a pretty picture. And also the new high, new low, and even the up-down volume. The last few weeks, and you look at the index, just keep on melting up, making new high every week. And it is going to end eventually. We just don't know when. Now let's go and take a look at the SP 500. As you can see here on Thursday, it closed above the 4,300 level. And it went up and closed above this 127 extension. Remember this 4310 that we talked about in the midweek video. And on Friday, it even came up to this 141 and exceeded that 141, 4338 level. And right now, if this thing keep going, it's going to come up to this 161, which is 4378, and possibly get up to this 4400. But, right, with the internals and the weakness of the advanced decline and the up-down volume, we're basically looking for the possibility of this thing pull back. Right now, I am still looking at that on the upside, basically coming up to this 4378 and possibly targeting this 4400. But on the downside, I'm looking for these gaps to fill. And I am looking for a pullback to at least down to this 42.55, and at this current level, that's almost a 100-point pullback. Okay, so essentially that's what I'm looking at right now for the coming week, is to see would it be able to pull back at least, to get some of these gaps filled here, right? But wouldn't be surprised if it come down to 42.55, and I'm going to show you why later on. And for the NASDAQ 100, you can see the NASDAQ 100 been kind of flirting with this 127 extension for 3 days before it actually gapped up on Friday and closed above that. So right now it seems to be heading toward this 14,800 or this 141 extension at 14,850. But again, similarly to the SP 500, basically looking for a pullback and this gap to get filled. And I am looking for a pullback down to this 14,073. So that's a few hundred points here, somewhere around 700 points. So that's basically I'm looking at on a pullback. But on the upside, yes, it could come up to take out this at least this 14,800 level. And I wouldn't be surprised if it's going to continue to melt up. Here's that 618, that's at 15,233. Is it going to get there? Maybe. There's always that possibility, right? Anything is possible. But right now, I'm looking at the internal, and also the probability is that we're going to see some sort of a pullback. And here, looking at the Russell 2000, we see the Russell 2000 pull back on Friday, and it's still holding above this 2297 level. Okay, so we'll see what dip back down and maybe come back down and retest this low, possibly come back and retest this 2195 area. So we'll see would it be able to continue to push up to this 2360. So right now, the Russell 2000 is kind of, doing a little bit of a consolidation. I wouldn't say that it is pulling back or selling off. So we just kind of have to wait and see to see what the Russell decide to do. Looking at the Dow Jones Transportation, you can see the Dow Jones Transportation is holding above this, near this 15,000 level. And although it did close down a bit on Friday, after a strong Thursday there, but it's holding inside of this channel, and it is above this 15,000. So we'll see what it continue to consolidate and possibly come up to this potential resistance from prior support level near the 15,350 area. Okay, to see would it be able to come up and test that level, or would it continue to come down and break this trend line, this channel, and come down to this 14,242. And looking at the Dow Jones Industrial, no surprise, right? We've been calling that Dow theory in play, right? We expected the Dow Industrial to close at a new closing high, which it did on Friday. It closed at 34,786.35, which is above this closing high at 34,777.76. Okay, so that's the Dow theory. The way that I interpret it, they've been telling us to look for the Dow Jones Industrial to make a new closing high. A lot of people are saying, oh man, look at that Dow Jones Transportation, it's really weak. The Dow Jones going to come down, the Dow Jones Industrial. No, that's not how it works. So right now, it's no longer in play. The Dow theory is done for now. So we're going to basically have to wait for a next signal if it's going to give us another signal. So we'll be marking some other market for other market message to tell us what the Dow Jones is going to do. So right now, we essentially are looking to see would it be able to come up to this 35,000 and take out this high here, this all-time high. Okay, so and that all-time high is 35,091. So we're essentially looking for that 35,000 level. And then on the pullback, we're basically looking for these low here. Okay. So basically looking at this low somewhere around 33,300 area to 33,000. Now, this part of market index, the New York Stock Exchange composite, see that it's holding up and also inching its way toward the all-time closing high up near the 16,708. Last week at Friday closed at 16,674. Okay, so we'll see will it be able to come up and put in a new closing high. Looking at the 10-year yield, we see that the 10-year yield is still, inching its way down and basically watching for this 1.4. Seems like it want to head it down to this level. And as we see, the dollar is trying to get up, but kind of got stalled a little bit, pulling back down. But it's still back in this zone here, this 92, between 92 and 94. So if I see a little bit more chopping around and see would it continue to move itself up, or would it break back below this zone, out of this zone, and come back down to this 91.24 area that I'm looking at. And here it is, looking at the crude oil, went up above this 75 level and into the zone now. So basically looking for this 77 level to see would it be able to come up to the top of this zone, or it will come back down and inch its way or work its way back down to below the 70, essentially coming down to this level here, somewhere around 67 area. But we'll see. I think it could still come up to this 77 level. Just kind of keep an eye on it. Definitely it's not time to get in and try to chase this move. I think this move is getting close to its destination, and we might get a little bit of a turnaround and come back down, do a little bit of a profit taking. Now, although the dollar was holding up, we saw the silver actually came up last week on Friday. Actually came up to this 2667 level. Right, it didn't close up there, but it did come up. So we're gonna see next week would it be able to get above that. If it get above that, then I'd be watching it to work itself back up to at least to this area, somewhere around this 28 level, and see would it get above that and work itself into this 2950. So I wouldn't be surprised that we see a little bit more chop here. But again, I think a lot of people is looking at this like a bear flag, and and then if it does form this type of price action and come back down, then we're basically looking at this 2470. And looking at gold, as you can see, gold came down here, right? It came down to this area, bounced off of this pivot, right? This little breakout, right? So wouldn't be surprised to see gold could make its way back up above this 1804 and then move away and come back up to the 1846. So you might want to keep an eye on gold here. There might be a possibility to make a little bit of a play on the long side. So, and just if one want to take a trade up and try to get above this 1804 and short-term play for the 1846, then I would put a stop basically underneath this, this low here, somewhere around here. Okay, and just in case this pullback is not has not been completed, then it might come back down. Then we'd be looking for the next level somewhere around this below this 1700 area, somewhere around the 1700 area to the for the next possible swing long trade location. Remember, I was talking about these two potential trade location to look for swing long, and right now we are sitting here at this area now. So there's nothing certain in trading, right? Okay, there's no such thing or a sure thing. You're taking a trade, every trade, no matter what your edge is, okay? You're basically putting on a trade that is 50-50. It could go in favor or against you, right? That's all it is. But the thing is, you're just gonna play your probability of your edge, that in the long run, your edge will play out, okay? And whatever that edge and that positive expectancy is will, become reality, will come true, okay? And that's a long-term gain. right? It's not a one trade, two trade, this trade, that trade, okay? Every trade that we take is 50-50 proposition, right? So that's why we manage a risk. Now let's look at the EMini SP500 Future, the ES. As you can see in this market profile here, on Friday, there's a lot of poor structure, just like one of the day from earlier. Right? We had some maybe poor structure days. I believe it's down here somewhere. Yeah, on this day, right? Okay, so we see a lot of single print and hardly any attempt to go and fill some of those single print on Friday. So we're gonna be looking for these single print to get filled sometime next week, and we might even see that on Tuesday. So we'll see. But you know, these are definitely a lot of poor structure here just on a single day basis, and some of these poor high and also naked point of control here that need to get tagged. So we got a lot of these point of control is untagged. So I'm expecting you know, some sort of a pullback, and when it does, we could see the floodgate to open up and come down and tag some of these naked point of control and clean up some of these what I call unfinished business. And also looking at the volume profile, you can see that the volume profile opened the first 15 minutes, kind of chop around, put in a little bit of a double bottom, but never came down to the overnight low or into the prior session value area or even into the range. So there's a huge gap open. And as you can see, after the first minute or so on this chop, it moved above the rewrap, the developing rewrap. And then it just woke up and put in the initial balance, the first, you know, for 60-minute range, and kind of hover right below the initial balance high, the IB high, and also check the rewrap. So once it starts bouncing off and taking out, you know, move above the IB high, you can see that today that the buyer is in control because it is holding above the VWAP. So, and then you can see this little surge has come up, you know, and probably got a little bit of a short covering running. And here we kind of run again to, you know, take out some of these short-term shorts, right? And then come up and then start forming a little bit higher level of a value area. But then, you know, come up here, got a little bit of a cutoff. That's the high of the day. Then start liquidating and close out for OPEX. You know, option expiration, a little funny, you know, fun and game. But you can see the, you know, the point of control is still down here. So we could see the price could come down and maybe, you know, to come and test this point of control to see would it find acceptance or rejection away from this value. Okay, if it reject and move back up, then the point of control have to come up to establish new value area, right? But if it stay down here, then the price most likely will come back down and try to chop around here. Then that could lead to the possibility of getting back here is that come down and start testing these, you know, tagging these poor high and these point of control, right? So that's basically what I'm looking at. And these, you know, this is one of the reason why I am looking at a potential pullback next week is these poor structure and a lot of these unfinished business down here at the, you know, below the current level here that need to be, you know, get to take care of. And looking at this heat map of the S&P 500, you can see the predominant mover was the FANG stock, the large cap tech stock, and also some of the semiconductor stocks. The financial was quite weak. The healthcare did participate in some of the consumer discretionary. Okay, but strangely enough, the energy is not participating much at all. Okay. So industrial, a little bit of a mixed bag. And if we switch over to NASDAQ 100, you can see that, look at all these large cap tech stocks. Amazon, Apple, Google, Microsoft. Then the semiconductor, you got NVIDIA. Even Intel is moving. So AMD, Qualcomm. So with this in mind, the New York Stock Exchange cumulative advanced decline and also the rate of the ascent from the S&P 500, and also looking at the EMini SP500, a lot of those unfinished business and the poor structures, right, of the price action, that lead me into saying the probability is high for this market to be to have a little bit of a pullback in the near term. So on Friday on my Twitter stream, I tweeted this out. I said, you just have to bite the bullet sometime and say, I'm going in. Because right now, the market, if you look at the internals and also the price action, we saw how weak the advanced decline, the up-down volume, and also the new high, new low in the New York Stock Exchange and also in the NASDAQ market. Right? So the odd is in favor that the market is going to experience a little bit of pullback in the near term. And rather than wait until you get this pullback, then jump in, I'm just basically dipping my toe in the water in a sense. So I did initiate a small position on a put vertical on the SPX, the S&P 500 index. Okay, so if the coming week, if the weakness starting to materialize, then I will look for opportunity to initiate more trade on the downside. And definitely will be really cautious on the upside, on the long side. And I would not be go and chase after those long trade, because I think the risk is on the downside here. Okay. So hopefully you find this video informative. I'm not trying to scare anybody here. Just enjoy the 4th of July weekend. Stay safe, and be sure to smash that thumbs up, help me promote and share this video. And thank you for watching.